start at the disclaimer. And I'm only going to read this disclaimer once, but it does apply to all 3 deals, of course. It's important, though, especially if you're brand new. On this call, we cannot provide advice to any specific individual who's working on any specific acquisition. That isn't our purpose. The purpose of this call is to observe how experienced deal makers look at new opportunities, the questions they form, and strategies they might potentially pursue. If you were going to develop an actual acquisition plan and we were going to be participating, we would need a lot more, not a little more, but a lot more in-depth information on the target companies and on the sellers than we're able to review on these calls. So if any of these deals are yours and you submitted them, don't take anything that we say in this call as advice. We're just throwing around ideas, sharing some thoughts, and that's what Dealmakers are doing all the time. So maybe I will share the hosting duties just so that we can do some muting if it's necessary. Because sometimes people do forget to mute when they come on and they're doing other conversations. I do it all the time myself. So let me just maybe make Sarkis the host while I'm going through these presentations. People are pretty good. It's not usually a big problem, but Sarkis, you're going to be the host, okay? And your major hosting duties, Sarkis, is just to, if someone inadvertently doesn't have their mic muted while they're having a side conversation, you can just mute them up, and then when they come back, if they're called on, they can unmute. Okay, so let's get into it. We'll put the simple model up here. I'll make it a little bit bigger. I know it's kind of tough sometimes if we're doing this on a laptop, but I really need to do this side by side. So this is about as big as I can get the type side by side. We'll stop there in case anybody wants to do the screen capture, but I do like to, while I'm going through the notes, get you down to the balance sheet and the P&L. Okay, what's this business all about? Lawn irrigation and lighting design. Okay, let me put a side note in here right here as well. There's a couple of red light, green light deals that I have not been able to present, even though they're quite interesting because they're just so unique that it would be almost impossible to maintain confidentiality. It was a beauty business that David submitted. We did a 911 call. It is an interesting business, but there's about 3 or 4 parts to that business that were so unique that if I described all 3 or 4 parts, it would be dead easy for somebody to do a search and come up with what the business is. So confidentiality is super important on these calls. I don't share any information that the broker or the business put together. These are all my own notes. And of course, the confidentiality is of utmost importance. So I was worried about this deal. I thought lawn irrigation and lighting design, is that a thing? If I put this out there and this business does both of these, is that going to be pretty easy to identify? It turns out no, this is a very common combination. There are dozens and dozens of listings of businesses that do both irrigation and lighting design. So no worries there. So customer mix, this is an 85% residential business, 15% commercial. They focus on single family homes. It's located in the U.S. Intermountain region. Think Rocky Mountains, founded in 1997. Trading area, regional. Business has been on the market for 4 months. Asking price, a little less than $1,930,000. No property included in this deal. It's owned by Keith. He's 68. He's the sole owner. As far as I can see, he's the founder as well. Still active in the business day to day. And in fact, he realizes that, transitioning will be difficult because there is no number 2 ready to sort of step into the role of GM. So Keith understands that a GM is going to be needed to run the business in his absence. So he's willing to work up to 2 years post-closing to help the new owner find a GM and smoothly transition the business. Keith started in landscaping, pretty competitive business, and he pivoted into irrigation and lighting. I think a less competitive business, and if you do a good job, strong word of mouth. The motivation for sale, retirement. Yeah, Keith's a baby boomer. He's 68. Not a lot of detail in terms of what he wanted to do after retirement. Just as a little bit of an aside, why is that question on the submission form? Because what they're going to do post-retirement will have, bring a fair amount of coloring into what they're expecting in terms of deal structure. These are real estate investors. These are people who are starting up a new business. These are people who have an obvious need for a lump sum. It might be difficult for us to put them on an annuity deal or something else that requires most of the funding over time. It's not by any means the only thing that's relevant in that capacity, but it's certainly helpful to know. Here's someone who's retiring. Are they playing with the grandkids, or do they have plans for what they're going to do in retirement that requires some cash, which would sort of drive them to be looking for a large closing payment? So that's the reason why we ask those kinds of things, and we're looking for some detail. Legacy is important to the seller. to the degree that, wants to protect employee jobs. And so nice that that's on the list of things that are important to the seller. 6 employees work in this business. They're not operating at full capacity. When you break the revenue down, new irrigation systems, 38%, maintenance contracts, 38%. Now, those are nice, those maintenance contracts. We can get them on a kind of a yearly basis that just roll over annually. That's nice business when you can set it up that way. They don't do any marketing. Nobody works in sales. New business comes through word of mouth. Lots of excess capacity in their operation, so there's plenty of room for growth. Yeah, the website below average. Definitely needs a bit of a refresh. I mean, the pictures were good. As people who've been on this call before knows, when you're remodeling kitchens, when you're doing hardscaping and landscaping, and you're doing this kind of stuff, right? Or an interior designer, you have to have the wow factor on the photos. And they do have good photos, but they're not presented all that well. And the rest of the website, I thought, was a little bit below average. Google reviews, 4.3 out of 5 on 12 reviews. So kind of a bit of a meh on that one. Mud score, I would say, is below average. There was absolutely nothing concrete noted in terms of motivation, urgency, or distress in the notes. You can't go by age. It's funny, Sam and Jay and I were talking this morning about a deal that Sam's working on, and he's got a couple of brothers who are 77 and 78, and he had himself what he thought was going to be a good deal. Sam's really good at working with these sellers. He structured something that did sound appealing to them. At the end of the day, they weren't too sure they wanted to leave. They weren't too sure they wanted to exit the business, 77 and 78. So sometimes these businesses, when these people are even 10 years older than this seller, the business is not necessarily hardcore for sale. If it's the right mix, the right offer, the right person, the right buyer, the right circumstances, maybe we can get them to sell. But age is not the ultimate sort of test in terms of whether somebody's going to sell their business or not. So not a ton of background color on this. And again, this is no knock against the protege member. It could be that they just weren't providing much in the way of information. If we take a look over here in terms of the financial statements, I mean, the SDE, and people say, well, maybe that's not SDE because the replacement salary is in there. For a couple of reasons, I thought it was kind of like a borderline. I put SDE, but I could have put adjusted EBITDA in there just as easily. Amazing gross margins, even decent operating margins before the add backs. So pretty stable. I mean, the revenue is not high, all less than $1 million. A bit of a smorgasbord in terms of the financials that they presented to us. We have financial statements, and we have SIM numbers that were prepared for tax purposes. The add backs, of course, are in the SIM, and so a bit of a mixed bag. Before I throw it over to Sarkis to get his take on this, one thing that is a bit annoying about these SIMs is they gave us a balance sheet, but not a balance sheet that's supposed to do what a balance sheet was designed to do, which was to help you understand the financial position of the business. This was a massaged balance sheet to make this look more appealing to sell to a potential buyer. And all these things were adjusted, and they made the adjustment in terms of what this business is going to look like at closing. So if we got someone to audit the financial statements of this business, the balance sheet wouldn't look like this. This is an adjusted one. There was no non-adjusted ones. And by the way, if we were going to take this to a lender and all we had was this massaged balance sheet that represented the brokers and management's ideas of what you should know about the assets of the business, you're not going to get very far with a lender with that. So when we press them for, give us financial statements off your accounting system, right? Whether it's QuickBooks, Sage, Xero, whatever it happens to be. Give us financial statements from there. Those should reflect the financial position of the business. What could be missing? Well, maybe, this is the kind of business that someone could have made a big deposit on. Maybe it's a commercial client, right? Maybe they put $500,000, as a deposit. That represented cash in the bank, which, by the way, the seller wants to remove. The cash at the bank as zero doesn't mean that there's no money in this business. It means the seller wants to keep it as part of closing, right? And they've eliminated this potential deposit. Who knows if it's in there or not? But does that mean that we owe some particular client $500,000 worth of work, right? Once we take the business over, we don't know. And that's the problem, just one of a number of problems that happens when you're looking at a balance sheet that wasn't prepared according to generally accepted accounting principles, but was prepared according to what was going to put the best foot forward for the business, for the potential of enticing somebody into potentially buying it. All right, so I've given Sarkis some time to kind of digest this deal. So Sarkis, for this deal, you're Carl. What do you think? Do you like what you see here? Is this something that you'd be interested in putting an offer in on?
I guess I'll give you a political answer on this one, John. It probably, depends on my circumstances as an investor to look at this business. So, what's good about this business is that we can see that sales is fairly consistent. Bottom line, more or less, consistent or internal operating income. So we know that even 2020 was a COVID year, right? So they still managed to, put in a decent amount of revenue there. My question would be, how would this business react in a recession, for example? Would this be considered as a luxury item? How badly would the business suffer if there was a dip in the economy and people were, saving up? Would this something that they would forego? Overall, they've got 38% annual maintenance contracts, which is solid recurring revenue. They've got new irrigation systems, 38%. So I'm presuming that new business coming in with no sales at all on the business. So that's something that they can work on in terms of marketing and getting a salesperson in or whatever. But that will also increase costs, obviously. If I would invest in this business if I felt that I could grow it, and if I was an investor that had other businesses maybe, or it's not going to be my main focus, I'll look at it that way perhaps.
Okay. I mean, it's a pretty simple business. I don't think it's a huge high ticket item in terms of, being a luxury good that people are going to shut down necessarily if the business cycle, takes a bit of a dip. So one of the issues, let me ask you about this, Sarkis. I mean, one of the things I don't like to say, and you've seen thousands of these sims just exactly the same way I have. Like, all these ad backs are just rounded, 115,000. The medical just happened to be 18,000, right? The non-essential telephone just happened to be 12,000. It didn't deviate year from year. When I say things like this, I'm like, you know what? This is just something right off the top of the mind of the seller, right? We're not looking at real numbers here. We're not looking at real numbers at all. And it gets worse because this balance sheet they manufactured, 50,000 of accounts receivable, 25,000 of inventory. They're just, all these numbers are round. They're just kind of making them up, right? There's $35,000 worth of accounts payable. So as far as I'm concerned, yeah, I guess this is not these are not rounded numbers. So I guess these probably maybe they represent real numbers. Maybe they've massaged or adjusted. I don't know. But my confidence factor on these things, I'm going to put the big L for confidence factor being really low when I'm taking a look at numbers like this. I definitely, if it was me, I don't know about you, but if it was me, I would not put an offer in looking at these financials without having some more meat on the bone and really doing a little bit of a quality of earnings analysis and find out where do these numbers come from? Because clearly they didn't come from an accounting system. They clearly came from the brain of the owner or the seller who's just giving round estimates, for the purpose of putting it in the confidential information memorandum. So when that's the case, then all of a sudden, if these have low confidence here, then, kind of low confidence here, so.
Like any deal, if you can't rely on the numbers, then for sure, you're not going to put an offer in. So you have to have confidence in the numbers that are being presented to you. And I agree with your comment about the ad backs. A lot of that would probably be eliminated. So if you look at the EBITDA without the adjustments, that's looking more like a job rather than a business ownership.
Yeah, I mean, his point here is that if we're just taking a look even at EBITDA, forget about income, right? Before these ad backs, it's looking like a job rather than a business. And so to get him to get close to the valuation that he's asking for, which is 930, right? It's going to depend upon all of this stuff in here, which is very, very iffy. So I, number one, wouldn't put an offer in. And then if I did put an offer in, once I got some more, clarification on these numbers, I don't think I'd be looking at $930,000 for this deal. I mean, I just don't see it.
Agreed.
Yeah, I mean, the fact that we don't have that the broker didn't provide or the individual who submitted this didn't include a little bit more information on Keith really colors whether, okay, there's problems, but, would we see enough opportunity in terms of a high enough MUD score, motivation, urgency, and distress to think, okay, this is somebody who needs to sell his business in the next 6 months. And so therefore, I'm going to try and put a creative offer in here just to kind of play off that, high MUD score. We don't really know in this case. So I'm really lukewarm about this, without knowing the urgency and the distress. So I'm generally not feeling that great about this deal. I mean, there are no liabilities on the balance sheet. So, we could potentially borrow some money. I mean, this is one of the things we do, Sarkis, on these red light, green light calls. We try and figure out how can we potentially finance this business. I mean, there are some fixed assets, equipment and tooling and vehicles, $229,000. It says these were prepared for tax reasons. So one of the things that we review on these deals is whether the fair market value of those assets might exceed the tax value. But since this balance sheet is manufactured anywhere, this might not even be an accounting number. This might be a fair market value number, a real one, or the wishful thinking of the owner in terms of this is what I think these assets are worth. So taking that, putting it up here, and then doing what I did, assuming I could maybe borrow 30% of it, I don't think we could make that assertion with any confidence at all at this point. So for the people that say, well, John, how would you finance this? I would put together a financing plan with a little bit better numbers, so I knew where I really stood. What is the borrowing capacity of the assets on the balance sheet? And if I knew that, then I could potentially, maybe I can come up with a closing payment. Maybe I can't. But right now, I don't think that I'm in a position to be able to say that.
Yeah, it's definitely very weak financing. Otherwise, I'd probably be looking at putting a chunk of money from your own pocket or looking at cash flow lenders. So yeah, it just adds more to the negativity in terms of putting an offer on the table for this business.
Yeah, SBA loan, not sure. This guy wants to stick around potentially for 2 years. That wouldn't work with the SBA unless we did try to do some kind of a workaround. If I was going to do an SBA, it certainly wouldn't be at 930. It'd probably be at half of that or less. Okay, let's keep an eye on the old clock here.
John, who submitted this deal?
Carmen, your thought just exactly matched mine. Who submitted this deal? I'm trying to think who did submit this deal. I think it was somebody new. Anybody?
Somebody in Protégé.
Yeah, it's somebody in Protégé for sure. Okay, you know what, Carmen?
Maybe they recognize it if they're on the call.
Well, if they are, they can come forward, but usually I write them down. I didn't write them down today. So yeah, we're not, they're obviously not here. I think this is Todd's deal. Yeah, pretty sure it's Todd's deal. It's all coming back to me. Don't think Todd is here though. Okay, let's go to some of the protégés and get their take on it. I'm going to ask you, and if you've got your camera on, you're fair game to be asked. I'm going to ask you for a red light or a green light. Give me a number, which is a measure of your conviction, and kind of 30 to 60 seconds on why you would either red light or green light this deal. Okay, who should we get started with? How about, let's go with Chris McGraw. Chris, I have never called on you. I love to call on people who are brand new. Can you unmute and tell me whether you would green light or red light this deal? Give me a number and maybe some thoughts on why.
Well, I would probably like this. I'm brand new, so I don't know much.
That's why I picked on you, Chris.
I don't know much about this yet, but just given the number.
First, at first glance, prima facie, gut reaction.
I would red light this and probably a medium. So red light 10.
Okay.
Would that be considered if I went red light 20, that's worse? Is that correct?
Yeah, exactly.
I would say red
light 20 is worse than red light 10.
Okay. I would go red light 10 just because the numbers don't seem, like you mentioned, it seems that all these numbers are just pulled out of the air. This guy has obviously worked in the business for a long time and he knows best, and he's just going to throw these numbers out because that's what they kind of, sort of, maybe are.
Yeah, and hoping to find somebody who's going to take on an SBA deal and bite on this. That person, me, red light 10 from Chris. Perfect, Chris. Thank you for that. And welcome to the protégé call. So the red light, green light call. Okay, let's go to somebody else. I don't think we've had Carmen on in a while, offering her insight on these deals. Carmen, what do you think? Would you red light this, green light this?
I was just writing in the chat. I wrote red light 0 because I would just have calls with the seller and I'll find out about the month score. And it just happened that I was just rewatching a part of Carl's course with the advanced negotiating skills, and I really loved the part where he said, you have to go seller psychology, you have to find out why are they selling this business. And the question that he was going on and on about was, what are you looking for out of this deal? And you asked, just like in the books that he was asking us to read, you ask this 3 times, and actually the 3rd time you're going to find out what's driving the seller to sell the business, and then based on that response you come up with a deal structure that will make that seller happy. So I would not give it plus or minus. I would say 0. I would just try to understand the seller more and try to get some real financials before I decide.
Okay, fair enough. So since you're going to keep going, let's call it a green light 0.
Oh, okay.
A red light 0 would be the brakes. So a green light 0 would be, Carmen's willing to do a little bit of digging on this. So yeah, great take on that, Carmen. Thank you for that. Let's maybe go one more. How about Eldon? Eldon, can you unmute and maybe give us your thoughts, a red light, a green light, and why?
So I think I'm kind of with Carmen. I think that so it's not a deal the way that the numbers are, but I mean, it could be made a deal. I mean, what if you could talk them into the annuity thing? So I think it's just too much money for that business. But you could, if you could do it in annuity, I think you'd have to put you'd have to get the payment for the annuity to be somewhere like 25% of cash flow.
Yeah. Okay. Fair enough. So you're going to red light this as well, Eldon? Or are you going to give it a green
I think
light?
it'd be like, I think green. I think I'm not sure what opportunity the person's had to work with a seller, but somebody told me a long time ago that basically, if you want to sell something or you want to buy something, you just got to make sure that the price that you're happy to do it at. And so I think offers could be made that might, if you find out that, like she said, find out the motivation, and then maybe you can make a deal.
Okay. Yeah, great takes. I am calling on people who are at least brand new to me, who I haven't kind of noticed on these calls before. It might not necessarily be your first call, but let's continue on that thread. And I'm going to ask Anusha if she will unmute. Anusha, what do you think of this deal? Are you kind of thinking, nah, you know what, I don't see enough here to continue? Or yeah, I could do a little bit more digging. Red light, green light, a number, and why?
I would go like green light 5.
Okay.
It's because I'd want to be able to see like the real numbers first and then go from there. So I would be moving forward to see the real numbers. And then I think there's several areas for growth. So they have like no marketing. That's a great area to grow. Their website's poor, so we could also enhance the website, which is another way we could grow. And then there's excess capacity, which is a good thing. So yeah, but I also know that I'd either have to figure out whether I'm going to go through their price and my terms or my terms and their price. So I'd want to be able to decide that once I see the real numbers. So I'd go, green light 5.
Yeah, I mean, these are great takes. These are great takes. Sarkis, what about you? What are you going on this one?
I'll probably go green light 20. It's worth exploring it further. You give it a chance. It's got steadiness there. It's got the potential to grow with added marketing and sales and see there's a growth. But if you do a little bit of research, for sure you can make a better decision then if you want to stop or continue.
Right. Personally, I would red light this deal. I would give it a red light 33. I mean, there's a lot of deals out there. People who have been on this call for a while know my theory, which is, we need tons of deals in the top of the funnel, but we don't want them hanging around, unless we feel good about them. I'm not saying that there couldn't be something here, but if I'm going to roll my sleeves up and I'm going to try and figure out if there is something, I want something that's a little better starting hand than this one. We want to use the poker example. Right, something a little bit stronger out of the gates before I would be prepared to, push this thing. Whether this business is really for sale, who knows? We don't know the mud score, we don't know the motivation. Seems overpriced. There's just a lot going on there. It would be a lot of back and forth. And for me, I would go no loss on that one. But that's just me. If you haven't voted, vote now. A lot of people have put their votes in. Kind of a mixed bag. They're all kind of low, which is typically what you get when the thing is a little light on information. So